Hi, Pete.
Hello, Catherine.
Thank you so much for joining us. You've only just got off the plane from, well, I was going to say from the UK, but it's always a journey, isn't it? Coming back from the UK. It's never like I've just come back from the UK. It's like I went to the UK, then I went to Singapore.
It is at the moment. I actually had to come via Sydney because there's so few flights at the moment. So to get tickets for 4 people, you kind of get what you're given. So yeah, it's been a bit of an event, but anyway, I got here in the end, back to Noosa today. So yeah, good to be back in the sunshine.
Yeah, I bet it is. How was the UK? What's the climate and the atmosphere and everything like over there at the moment?
Very unusual, actually. So without going into too much detail, the government put in place a lot of stimulus measures, or actually cost of living pressure relief in Britain because of obviously problems with gas and electricity prices. But as it's transpired, the winter's been extraordinarily mild. So actually, a lot of people have found that their energy bills are actually lower than normal, and the inflation risk has come right off. So I think possibly they might even dodge a recession there over in Europe, which a few months ago seemed highly unlikely. So things are relatively a bit better than they were.
Yeah, which is good because I've got family in the UK and I talked to them. I know that when you first went over there, because you went back for Christmas, didn't you? And it was exceptionally cold because I saw you. We're English, so we have to spend 5 minutes talking about the weather before we get onto anything else. But yeah, I mean, at that point, like I think you hit like, I don't know, it was minus something or other, wasn't it, when you first got over there?
Yeah, so there was some freakishly cold weather, but actually overall this winter, I think when they add up the stats, it'll be one of the mildest for a very long time. And I think actually across much of Europe as well. So you've seen energy prices all around Europe coming right off futures prices. It's a little bit slow to flow through to consumers. This is an issue which I think will actually dog Australia as well over the next 3 to 6 months, is that although at the wholesale level prices have come right off, but consumers are still getting price increases, which obviously has a knock-on impact to things like inflation and our mortgage rates. So we'll probably come on to that, no doubt, as we go through today.
Yes. Let's just talk briefly because obviously, we're recording this for Land Cycle Investor, and on that platform, obviously I'm talking about the land cycle, what occurs in the land cycle. And the land cycle can be traced back in America through a long period of time, back to around 1800. And in the UK, it can be traced back to the 1600s. It's got a much longer history in the UK and Europe, only simply because, well, they're older, obviously, countries, but we have some data that goes back to those periods in areas of Europe, some long-term housing data that enables you to trace that cycle back. So it's always interesting to know what is happening in the UK property market, because all we hear about is what's happening here. Rates are rising. Is it impacting the UK property market as severely? Well, I'm sure it is in the media, but what's happening in areas of London? What's happening in the southeast? What's happening north?
Yeah, activity is definitely down. I guess there was a period there where not only was there zero interest rates, there are also stamp duty exemptions in the lower price brackets. So there was kind of a boom in activity, not dissimilar to Australia, I suppose. Certainly things have calmed down a lot. Bank of England went very quickly and very hard on the base rate increases there. So, but it looks as though with inflation, actually, sort of the last couple of months have been negative. The economy certainly slowed right down. So there may well be a pause ahead for the Bank of England. And I think obviously it's a slightly different mortgage dynamic over there. But a lot of lenders have started to actually cut their fixed rates, and there are fixed rates available under 5 again now in the UK. So I think so far the fallout has been fairly modest. Activity's down, prices not that much. But yeah, I mean, things have changed so quickly over the past 2 or 3 years that you wouldn't want to necessarily make any confident predictions about what's ahead, because, maybe inflation will be resurgent and things might sort of stall again. But at the moment, things have held up a lot better than you would have expected 3 or 6 months ago.
Yeah, I think we can probably say similar in Australia. I mean, I work on the ground in the property market, and I can tell you that the feeling on the ground is very different from what you read in the press every day. I mean, obviously the press are putting out individuals that are either going through mortgage stress, or they're finding, cases where property prices have fallen, or they're looking at median data, which can be elusive in itself. When you see a dip in the median, you're not quite sure how that reacts on the ground. So like the middle ring kind of budgets, around that sort of like $500,000 to $800,000 budget in Melbourne, the properties around that price have actually held up. They've not really seen much of a markdown over the last 12 months. And now, because stock is so low at the moment now, particularly in the inner city. I mean, Melbourne really suffered during the lockdowns. We had these long lockdowns, a lot of people left. Now it feels like there's just not enough supply to meet the demand there. And I would say that in some instances, it's not that it's not still a good negotiation market. It is, because people are being careful about their budgets. So no one's really kind of overpaying for anything. But it's almost kind of tipping in favor of buyers in some places. Is that your general gist of what you're seeing as well?
Yeah, it's interesting, isn't it? I think if you sort of in a hypothetical world, and you said, let's say a year ago, that we were having this same discussion, and somebody said, look, the Reserve Bank is going to take the cash rate target from basically the zero lower bound to 3.35% in very quick time, the fastest tightening cycle we've seen in modern history. I think, if you sort of had that information a year ago, you'd have said, well, look, the housing market's going to be under severe pressure and prices would come off a lot more than they have. I mean, I think if you look at the various data providers, you mentioned median data, it's a bit in the eye of the beholder sometimes. I think prices are down maybe 10% with CoreLogic, but some of the other data providers have actually shown smaller declines. If you look at PropTrack, for example, and asking prices haven't come off that much. So I think you can debate the reasons why that's the case. I think probably a few different reasons. I think unemployment's been very, very low. Full employment, wages gone up a bit. I think the other thing is, though, that people are just looking ahead. I think sort of first order thinking is, well, interest rates have gone up. But then I think people are, as you mentioned, they're looking at the stock on the market. Then you've got record high immigration projected for the next year. Housing supply is not keeping up. And I think some people are just looking maybe a year or two ahead and thinking, well, if I can snag a bargain now, it might not be the worst thing, even in the face of interest rate rises, because we've probably got one or two more to come yet.
Those population estimates are really significant, like the migrants coming in mostly to Melbourne and Sydney is significant, because we saw the inflation that happened during the pandemic years in the property market. And a lot of that was caused by a population shift, because we didn't see so much inflation happening in Melbourne, in areas of Melbourne where people were moving out. And obviously they were moving into the regional areas. And that caused this kind of move of the dial in property prices, aside from the fact that, the stimulus that was pumped into the economy, obviously that had an effect as well. Now, the immigration coming in, what that's doing to rents, what's that doing to asking prices for rents, which because we use SQM data for. I mean, there's a really serious problem, isn't there, in the rental market, because we have never had vacancy rates this tight for the data that we've got recorded historically. That's correct, right? That's what your read on it is as well?
Yes, and I think if you look back historically, we probably never used to have as many properties on Airbnb, so that would be a factor that's driven down the residential vacancy rates as they're reported. But yeah, markets are very tight. I think there's just a range of different factors that have contributed to that. You mentioned some of the people moving back from up here, Sunshine Coast, heading back to Melbourne. You've got migration. International students are coming back in droves. Recently, there was an edict from the ministry over in China saying that online degrees would no longer be acceptable. So there's 50,000 potentially students on the way back from China, which is adding to the pressures. I think some landlords exited the market through the pandemic for various reasons. I think partly legislation, but also now we've got rising interest rates. So I absolutely detest the phrase perfect storm, because it gets used for virtually every story on economics, but it kind of is a little bit when you look at it, all the different factors coming together, and the rental market very tight. I think you mentioned that. I mean, asking rents for Sydney are up 30% over the year. Brisbane and Melbourne about 25. So yeah, I mean, it's there's a whole range of different factors contributing. I don't know whether it will continue at the same pace. I think sometimes people start looking at other options when rents are rising so quickly. And there's cost of living pressures. I think people start to think about maybe renting jointly or staying with parents. And I think, things find a level eventually, but no doubt there's lots of pressure on the rental market.
Which is, it's interesting you say that, because I read a story the other week, of people, they were kind of showing parents that were trying to find rentals for their kids that were going to university. They couldn't find them, and they were getting to the point of saying, look, we've just got to buy. We're now looking to buy a place because it just doesn't make sense to, apply for so many properties, get turned down on them. It makes more sense to kind of get the money together, parents to get the money together if they can, and to get into buying a property. And that obviously is just adding to the situation, the pressure there. But it was also interesting to see that there were some open for inspections in Sydney where people were queuing to get through the open for inspections, and this is the buyer market. And that kind of reminds me of the conversation I had with Louis Christopher when he just released his boom bust report, and he was saying, Sydney is going to lead this recovery. And of course, Sydney's been hammered really badly through 2022. I mean, it had, obviously, the most expensive city. It's going to have quite significant falls in its median, which it did. But now, is his forecast going to come right? Because we're seeing this kind of demand pick up in Sydney, basically because there's not enough stock. There's not enough property for rent, and there's not enough property for sale. Do you think that there's some kind of credence as to his forecast might play out in that market?
Yeah, I think it depends. It's a bit patchy. I was just thinking we were clearly born into the wrong families, Catherine. It's a shame we can't just tap on our wealthy parents to buy us a property because because the rental market's been pretty tight. I think actually, as an investor in Sydney myself, I had a couple of properties come up for renewal or for new tenancies in the last month or two, and I mean, applications just flooding in within a day. So I think if you've got where there's a sort of a well located good property, I mean, the rental demand is red hot at the moment. I think if you actually look in sort of just over the past week, you're starting to see some of the price indexes actually recording increases for Sydney. I think some of the early auction days in the year, a lot of people were, the auction houses packed out, and suburb records being broken, and I think that's largely just a function of there being so little stock on the market, and some people, quite keen to buy, family homes or upgrade. But I do think though, there are some markets where, if you look at, say, the Northern Beaches, for example, where prices just went ballistic during COVID, I think there's price declines that have been happening in some of those markets, and that may well continue as borrowing capacities have come down. But in other parts of the market, the sort of lower and middle parts of the market, as you mentioned, well, the recovery may well be already underway, which is quite surprising when you look at the trajectory of what mortgage rates have been doing. But yeah, it's, I guess in the end, the old cliche comes down to supply and demand, and there just ain't that much supply at the moment.
Yeah, with the short-term movements in the property market do kind of come down to, supply and demand is really important in analysing that. But it's interesting is talk about the RBA for a minute, because obviously the governor was pulled up in front of the parliamentarians the other day to explain himself as to
explain
and then do something about it. I don't quite know what the outcome of that was supposed to be, whether they were expecting him to, apologize and say, well, okay, he's not going to put them up anymore, or he'll start reducing them. And, along with that, there's calls for him to, lose his job. And what's your whole take on? Did you get a chance to listen to or to have a peer at what he said during that?
Oh, well, I'm glad to say I missed most of it because I was on a plane. But I think from the summaries I've read, pretty much as you summarised, I don't think there was anything too much out of what you might have expected a Reserve Bank governor to say. I mean, it's been an unusual couple of weeks, almost like a witch hunt. Some people are saying the Reserve Bank should stop hiking rates. Other people saying they've been too slow. Talk about a situation where you can't win as the governor. I mean, the reality is we were in an unprecedented situation through the pandemic. Melbourne, as you mentioned, was locked down for months and months on end. So, practically had to put the stimulus measures in place. I think in hindsight, people are saying that the RBA should have started to move quicker, but they were mainly focused on keeping Australia out of recession as much as possible. I think it's easy to forget. There were forecasts of double-digit unemployment, people losing their homes and businesses, and we've come out of things, relatively speaking, unscathed. I think the cost of living spike is really a global issue driven by supply shocks. Can't really pin it all on the Reserve Bank. I think if you just look at the macro level, retail sales in December fell nearly 4%. The jobs market just seems to be starting to roll over. Looks like the unemployment rate bottomed out probably around sort of July to October last year, now just starting to rise. And consumer sentiment, well, it's about as low as we've ever seen outside of a full-blown recession. So I think we're getting there in terms of slowing the economy, but there's still inflationary pressures around. They're declining quite slowly. So I think if markets are expecting interest rates to keep going up between now and the next inflation print, and I can't really see wages spiraling. I think they might get to 4% wages growth, but I think we're getting close to the top of the cycle for interest rates, but maybe just a bit of a way to go yet.
We kind of been saying that for a little bit, sort of through the end of last year. We're nearly there.
Rinse and repeat. Yeah, we'll be saying it in 2 years' time.
They might pause. They might put in them pause in February, and then more data comes in. I think what's interesting was about that whole parade were the questions that were being asked of him, as to why are you hurting renters? Why are you determined to smash Australians? Really kind of like aiming, kind of firing questions. But it's interesting that the focus was on the housing market, because of course, even though everybody moans about housing affordability, there's just, you have the prices come down, but then mortgage rates go up. So we have a housing affordability crisis, and then mortgage rates come down, but prices go skyrocketing during COVID. We have a housing affordability crisis. But of course, what nobody really wants to happen, or what most homeowners or most people that purchase a property don't want, is their property price going down. I mean, I have buyers that I'm dealing with right now that are saying to me, where do you think prices are going to go? Should we wait? Should we be buying into a market like this? Because they don't want to buy into a market, even if negotiation conditions are good, if there's a prospect of their property price going down. So it was interesting to see that really that's where the focus is when you're talking about rising rates, because obviously it's hitting mortgage holders more, as one of the prime parties who it's hurting. But a couple of things out of that. I mean, the banks are making record profits. I think there was a article that came out the other day about, I can't remember it now, I should pull up the headline in front of me. But then, and the other flip side of that was some news that came out just a few days ago that there's now banks that are looking as to how can they reduce rates for people with longer loan terms, and maybe looking at the serviceability buffer. That's going to come. I think that's going to have to be assessed, isn't it? Because politically speaking, it doesn't matter how much Albert goes on about, he doesn't like, he's going to make housing affordable. Politically speaking, this isn't great policy for him, is it? If the housing market's getting smashed and consumer confidence is low and it doesn't look like it's going to improve.
Yeah, so I guess in a lot of different ways, we've had an unprecedented 2 or 3 years. One of the dynamics was we got a record surge in people taking out fixed rate mortgages, because at various points you could fix it under 2%, which is, when things seem too good to be true, they often are. So a lot of those mortgages are going to be resetting to maybe 5 or 6%. So banks are going to have to work with some of those borrowers to help smooth that fixed rate cliff, because some borrowers will get into mortgage stress or even into 30-day arrears. We're starting to see arrears rising, actually led by Melbourne, funnily enough, which may reflect the aforementioned lockdowns and small businesses closing. So yeah, look, banks may put some borrowers onto maybe interest-only terms, maybe extend the mortgages out. There's not much appetite these days, as you've no doubt noticed. There's not much appetite for foreclosure. Nobody seems to want to foreclose a mortgage these days. We saw mortgage holidays through the pandemic. I think we might see some interest-only lending, or maybe just people going back on a pause just to get through that period. The good news is we've got full employment, so there is a job more or less for everyone who wants one, and extra hours. And for most landlords, rents are rising and there's record low vacancy rate. So, we're not really in disaster territory just yet, but it's definitely something that will warrant close monitoring over the next year or so, because we've seen a really sharp increase in mortgage rates.
Do you see that? I mean, I feel with the fixed rate thing, there's been a lot in the press about that, are we going to see a flood of people putting their homes on the market, or a flood of sellers? Just suddenly they get to, there's a certain month that they will get to, and then suddenly the market gets flooded with stock. And I mean, in my experience and from what I've seen, is that people are quite prepared for this. I mean, I know quite a few people that are aware that they're going to be going onto variable from when they fixed very low, and that their rates are going to go up. And so there's already been a lot of conversation about refinancing, potentially selling. Some people have already sold. So I think I can't see that it's going to be the disaster that people are making that out to be. And I hope that's correct. I hope it's not going to be a flood of stock that suddenly hits the market and then, causes that kind of pain in the market. But have you seen anything similar than that? Have you sort of spoken to anyone that's had a similar situation?
Oh, yeah. I mean, look, at the margin, it will make a difference, and some people will choose to sell. But usually, when you get major issues in the economy, it's not usually things that are known about months and months in advance, because just as you mentioned, solutions are found. Friend of ours, James Whelan, refers to it as the theory of thing. Once something is talked about as a risk, it becomes a thing. But then, as a result of that, then solutions are found, and then it proves not to be a thing as a direct result of being reported everywhere. And quite often, it's this sort of completely unforeseen risks that broadside the economy, such as just a snap shutting of the economy, or completely unexpected black swan events. I think fixed rate mortgages, I mean, people have been talking about this for months and months. So yes, at the margin there'll be some forced sellers, some people will choose to sell, but I mean, you're looking at the context of stock listings being extremely low at the moment. It's saw it in the listed company results reported this week. Domain is really being hurt by the lack of listings. Total stock on the market is way down from the 5-year average. And if you look back to a decade ago, I mean, it's almost half of what we saw around 2011. So, yeah, I mean, listings are very, very tight at the moment. So I think some increase would be to be expected.
Yeah, it's certainly making my job very difficult in that regard at the moment, because that's honestly put a floor under prices, and there's just not the stock that's available. I mean, the real estate agents are really, desperate to get some stock. And so when stock is found, there is competition around it. It's not like there's big discounts happening, but if you price something, then you'll get some competition around it. And I think that that's potentially what could turn the market, could at least plateau us from where we are now and then see a turn. And I think that the clearance rate's coming in a bit sharper for the big. I mean, it's early days. I know that there's still time to go, but the clearance rate's coming in a little bit sharper in, the first few weeks, end of January, beginning of February, a kind of a testament to that fact. I mean, I can't see that it's very different from what's going on the ground as to what you're reading in the press, which of course are just focused on interest rates going up and what pain that's potentially causing to buyers. But the other thing with buyers is that, I don't have any buyers that come to me that say, we want to spend up to our maximum to get what we want. Every buyer that comes to me is saying, we have been given approval for so much, but we only want to spend this amount, so I mean it's not something where you would be potentially thinking that there's a danger ahead based on that. What about the building activity? What are you seeing in the construction space? Last year was full of arrears, full of large building companies going under. We're still seeing a little bit of that now, but we do have a crisis in terms of needing to build accommodation for immigrants that are coming into the big cities. What are you seeing about that? What's happening?
Yeah, so we've seen a couple of insolvencies or receiverships just in the past week or so. Not major developers, but it's still happening. I think that was partly because some developers were on fixed price projects or fixed price contracts, and then materials prices and the price of trades went right up. They really soared, and that put a lot of pressure on the development sector. And of course, you do get a bit of a domino effect. If somebody falls over, leaving creditors unpaid, it can have a knock-on effect to other players in the industry. New home sales are down almost half. They're down 47% from a year ago. Building approvals, they're always up and down every month. But if you look at sort of annual building approvals, they're at 24-month lows, about 180K or so. So there's a lot of supply in the pipeline. There's lots of building or dwellings under construction, near enough as many as we've ever seen. But I think if you look forward, new home sales, loans to build new homes, they're all dropping. They're probably about half the level they were running at, and building approvals have dropped as well. And I think the thing is actually the dwelling completions just haven't kept pace for various reasons. There was flooding, there was a lack of access to trades and materials, and of course now we've got immigration running a record high. So even with a big supply in the pipeline, it's just not keeping up. I think population growth is running at about 1 per minute at the moment, which, I mean, if you extrapolate that out, that's 500,000 over the course of a year. So I mean, you need to build a heck of a lot of dwellings to keep pace with that. And I think that's, as you mentioned, that's what's really being reflected in those asking rents. So look, sort of the too long don't read summary is that there's a lot of supply in the pipeline, but actually looking further ahead, well, we're going to be riding a bit of a roller coaster, and we're going to really struggle, I think, to supply enough housing over the next couple of years.
Yeah, it's interesting, almost the perfect storm in a way. Let's get out of the eastern states, because that's what we talk about all the time. And I have a lot of readers that are interested in other states other than what's going on the eastern board. I think that there's always been a bit of a complaint, isn't it? I mean, during like the first half of kind of like this cycle between 2012 and the peak in 2017, before we sort of hit that 2018 downturn, it was all about Sydney and Melbourne that going crazy, and everyone was talking about prices are going crazy. And if you lived in Adelaide or lived in Perth, you're sort of thinking, well, what the hell's happening here? Because nothing's happening here. It's kind of changed now. So, I mean, I've been talking to some agents on the ground in Perth, and they're saying to me, they get really frustrated about it. They say the market's actually doing really well here. We've not really had a downturn. And obviously prices are a little bit lower there, but the market is doing well. Prices are shifting. And again, the medium hasn't really taken a hit. It has been shifting upwards. I think it's depends which data agency that you look at. But again, on the ground, prices are increasing for certain property types. Have you got any data? Have you sort of taken a look at those markets to see what's going on?
Yeah, I mean, to some degree, it's largely because people come to me and say, I'm thinking about buying a property in Perth or Adelaide, and what do you think? So, and I can see from the inquiries that that's definitely been increasingly popular over recent months. So I think, as you mentioned, a lot of the media focuses on Eastern Seaboard, and in particular some of those coastal markets. So think about the sort of Byron, Ballina, Lennox Head, Lismore type markets. They're probably down 20 or 30% from the peaks, having gone absolutely bananas over a couple of years. Same on New South Wales South Coast. We're seeing it up here, Sunshine Coast. But where are the buyers going instead? I think, you're right. I think Perth is attracting more interest from investors from interstate. Adelaide particularly the coastal suburbs to the south of the city. There's some very attractive prices comparatively, and that's drawing people in. We've even had some people actually saying they're going to return to live in Adelaide, from Sydney and Melbourne, because more people are able to work remotely or do a hybrid working arrangement now. So I'm probably not following the Perth market as closely as you are, but certainly I've had people come to me and buy investment properties in Perth. Not advised by me. I don't get over to Perth all that often. It's not really my area of expertise, but I can certainly see from the flow of people investing there that the market's doing well, and the rental market extremely tight, just like so many other parts of the country.
Yeah, and obviously in Adelaide as well, rental market's very tight, and they've not really experienced downturns like we have in sort of Sydney and Melbourne. You, I don't know anyone that travels quite as much as you. I have my sister is an air stewardess, so she does travel quite a bit, but you travel quite a bit as well. And it's interesting because you released some stuff not so long ago about your wealth course. You did a wealth course. I can't remember the name of it. I haven't got it in front of me, but I watched your little video. She did these kind of 1 minute videos, here I am on the beach in Portugal, and here, and let me give you a bit of wealth advice as well. I'm interested, obviously traveling like really broadens your perspective on life. You see a lot of things, you've learned a lot of things. I'm interested in your experiences as a traveler, because I know, from our friendship and everything, you've said to me that it's almost like you get itchy now if you sort of stay in one position for one place for too long. You're kind of like, where can I go next? What's your kind of feeling on that, on your, traveling around, and how's that kind of affected your view of the world and where you are in your own life?
It's really funny you mentioned that, because I actually only mentioned your sister only about 12 hours ago when I was on a plane. I was talking to my wife Heather, and she was saying when she was younger she wanted to be an air hostess, mainly because she likes travel, hence our mutual interest in travel. And I said that your sister had sort of worked in the industry and travelled all around following the F1 as a result. And I think I think it's one of those things, like you get all the different personality types, and I just love travel. I think when I was younger, I used to I used to play a lot of sport, but also I used to drink. Whereas these days, I've got 2 kids, don't play any sport. We played a bit of golf, I suppose, but where do you get your kicks as you get older? And for me, it's like new experiences. I just want to sort of keep traveling. I think it is. Just from a lifestyle design point of view, I mean, I think traveling as widely as you can, it really does help to broaden your perspective on, firstly, it makes you appreciate just how amazing Australia is as a country. When you compare it to lots of other parts of the world, I think we take an awful lot of stuff for granted. So, I mean, that's one thing, but it also gives you a perspective on, what works and what doesn't in terms of political and economic systems, and I think it's just interesting to do if you're that way inclined. But it doesn't suit everybody. A lot of people have no interest in travel, so I think it comes down to the individual, really. But I mean, it's certainly really interesting just to compare, how Australia is faring in terms of its attractiveness as a destination. I think that there are just certain countries that are emerging now post-pandemic. And I think for international students and aspirational young professionals, there's countries like New Zealand, Canada, UK, Australia, and America. I mean, there's a lot of competition for talent now. And Australia always seems to be just quite lucky in that regard. It's an attractive destination.
Yeah, I mean, I've lived in, obviously, the UK, I lived in America, certain areas of Europe, but I think that you're right. Australia has a tremendous amount going for it, and but we're so isolated geographically. You kind of forget, unless you do that traveling and unless you've got your feet on the ground and you're seeing it from other perspectives. I mean, when you were going through, I mean, you traveled through Portugal during the lockdowns. You got caught in the UK lockdown, didn't you, when you first went over to England?
Yeah, it's a long story. I had to go to Britain for a funeral, but couldn't get back into Australia because the aforementioned 2 young kids, they weren't going to do quarantine in the Radisson for 14 days in Sydney. So it was we were stuck in Europe for quite a while, but you could travel within Europe, so did manage to get around a bit. So yeah, it was interesting to see. I think, as you mentioned, Australia is kind of the end of the line in terms of global travel. Australia and New Zealand, they're not really close to anywhere, so you are kind of isolated. But that in some ways that has its own advantages, especially when there's geopolitical tensions happening in Europe. It's quite nice to be out of the way in Australia sometimes. So it's got pros and cons, I suppose.
Yeah, for sure. Was that kind of felt when you were in England? What's going on, sort of between Ukraine and Russia, and those kind of tensions building? Because I mean, a few of the recent chats that I've had for Land Cycle Investor have been with people that have been talking about World War III and how we're really sort of heading in that direction. And I don't think people realize it here. And obviously, the atmosphere must be very different in England. Did you notice that?
A little bit, yeah. I mean, I think to some degree, it's such a big, potential impact of an event like that most people just tend to put it out of mind. It's kind of like, well, if that happens, there's not a lot we can do. I think people have certainly noticed the impact on cost of living. I think more immediately, people have seen the price of food go up and the price of fuel and energy bills and all of that stuff. But yeah, I mean, I suppose, yeah, I mean, it is a concern when there's, war happening, just on in Eastern Europe. It's certainly concerning. But yeah, I mean, it's kind of, in terms of the news cycle, it seems to be sort of less in the news in Europe at the moment. I think, people probably have a tolerance for reading about the same news item day in, day out, and it kind of, it's not in the headlines as much, but it's still there.
Yeah, I know that one of the things that concerns subscribers that I have, in terms of sort of war and the prospect that we could be heading in that direction, has been their investments and where to invest and how to build wealth through this period. I think there's so much uncertainty. There's uncertainty in the property market because rates are rising and people are getting pulled in by the news there of what's going to happen. And then, obviously the stock market is always volatile. But do you have any kind of like thoughts on your own? I know you do a lot of stuff, in regard to wealth building. You do a lot of coaching. I would encourage anybody. I'll put a link to it when in the blurb that I do for this podcast. But regarding your little wealth videos and your courses and stuff, and you've written a lot of books on it. What would your advice be to someone that comes to you and says, "Look, I'm worried at the prospect of this. How am I diversifying my investments? What should I be doing?"
Yeah, well, I think it's it's really a stage of life thing for a lot of people. I think if you're a sort of retiree or pre-retiree, I mean, one of the things that's really changed and quite quickly is that now risk-free rates have gone right back up. You can get around about 5% risk-free on government bond now, depending on where in the world you're investing. And I mean, that was just something that wasn't even on the cards a year or two ago. So I think we'll see a return to people looking at things like annuities and things like that. I mean, it really depends, though, what stage you're at in your journey. The younger investors tend to look at growth asset classes. Real estate is popular, as we've been talking about, obviously, stock markets as well. But yeah, I think it's, I guess, what would Stephen Covey say? Try and begin with the end in mind. What are you trying to achieve and over what kind of time horizon? And then I guess in terms of your strategy, you work it backwards from there.
Yeah, good advice. And in terms of the property market, is your advice generally to people at the moment to not to worry too much about rates and to step in? What are you saying to the people that you work with the market and where we're going sort of over the next 12 months? It's like difficult to forecast, isn't it? But I'm interested in your thoughts on that. Yeah,
I think if you're a borrower today, you should work on the assumption that there will be further increases in the cash rate target over the next 6 months. I think if you look at index swaps, probably peaking around September, maybe 4% for the cash rate. But I mean, I think, it's probably stating the bleeding obvious, but I think the last couple of years have shown you just how quickly things can change in either direction. I think, when the cash rate was at the zero lower bound, I mean, that's when the regulator introduced the 300 basis points lending assessment buffer, just to be on the more conservative side. I mean, the interesting thing is now, some regulators like the Bank of England have actually been dropping the buffers on the assumption that, with the bulk of the hiking or tightening cycle has already happened. So I think you should never borrow more than you can comfortably afford in terms of repayments, and you should work on the assumption that interest rates can go further, because they most likely will over the next few months. I think you need to just have a chat with a mortgage broker or a strategist in terms of what type of loan is appropriate, but definitely shop around. I mean, there's so much competition between lenders at the moment. I think if you look at the 3-year bond yield in Australia, which is a key funding benchmark, we're at about 3.4% today. So if you went back to, say, July, August to October last year, it was actually variously about 3 3/4. So there's some decent pricing around, and there's so much competition that if your bank is screwing you over on your mortgage rate, you should just phone them up and ask for a better rate, because most of the time you will get it, and it's well worth making that phone call.
Yeah, absolutely. Good advice. And so in terms of your traveling, are you located, you're going to stick around in Australia for a little bit now?
I've been pining for St Kilda Beach, Catherine, after my visit in November, being whipped by the high winds across across Melbourne's coastline there. I think I'm going to be based in Noosa this year, but I do tend to get to Sydney and Melbourne fairly often, and Brisbane. So I've got clients, most of those kind of areas. That's where they're mostly based. So I don't know if I'll get any overseas traveling for a little while, but I live in hope.
Yeah, well, you're very welcome to come back to Melbourne, or it would be very exciting to have you come back here. And it's almost 40 degrees here today. So
that is actually crazy. Yeah, I mean, I was down there for a month, as you know, last year, and I think we've got maybe 1 or 2 beach days of sort of weather. But obviously February's a bit different. But I think it's going to be an interesting decade for Melbourne. If you project it out, they're looking at population growth of about 1 million people over a decade, which is, you sort of don't notice these things, a bit like boiling frogs, day to day and week to week, but 1 million people in a decade. Interesting. You were just talking about sort of global perspectives. A brother of mine lives in South Korea, and you go to a country like that where the population is not only falling, but it's projected to almost halve over the coming decades. I mean, Australia is in a very different situation demographically speaking. We're populating at a furious pace. Lots of young people coming in. People like you and myself, coming in as young professional people to pay a lot of tax. I mean, it's very different population dynamics from countries like Japan or South Korea. But you've got aging and falling populations. I mean, Australia's got some serious growth projected ahead over the next couple of decades and beyond. So, I guess sometimes making these comparisons between real estate markets, I think you've got to take into account the local factors as well.
I was listening to a video with Elon Musk earlier. Came across social media in some respect, and he was talking about that we need to worry about population decreasing, not population increasing. And he was saying something that I've actually been saying for years and years, because obviously studying the land market, it's fairly evident, and that is that the world really is underpopulated if you go up in the sense of the land mass, because if you were to drop something from space, likely it's going to land somewhere away from people. That most of course our populations, the problem with it isn't that we haven't got enough land, it's just where those people are going. And yeah, I mean, Melbourne's property market over the years has really been a population Ponzi system. It has worked. It has based itself on population growth. While we've got population growth, then that's where you get those supply demand dynamics, and the market starts to go up, and people have to subdivide the land in order to accommodate more people in the suburbs that are popular. And you see that whole gentrification process happening, which is what's starting to happen now. But because we weren't thinking about that during COVID, you know, that kind of deficit. I remember those graphs that came through when we had those lockdowns of the, you know, tens of thousands of people that were leaving Melbourne. And
they're all up here. Yeah, they're all on Noosa Main Beach. But but as you mentioned, a lot of people heading back now. So the cities are the gravitational pull of Sydney and Melbourne and Brisbane is starting to exert itself again. So yeah, it's interesting times, because not only have you got people moving back from the regions, but you've also got permanent migration, working holiday makers and backpackers, and permanent migrants, international students. It's all happening, particularly Sydney and Melbourne now.
Yeah, absolutely. And because that population flows mainly into kind of like particularly in Melbourne, you know, they're flowing into the middle ring suburbs of the city. You know, that's where you get, and that's where the push in the land prices comes. That's traditionally where, you know, they're great places still to invest. But also the regional areas, you know, the larger regional cities. I mean, now, like we say, that people can work from home, there is a little bit of a change of, there is a little bit of an alleviation of needing to be so close to the centre of town. And there's also been like a calibrating what gives land its value over the last year. Would be interesting to see whether that continues, because now, you know, it's more valuable being next to some kind of topographical, beautiful nature reserve than it is being close to the theatre and the train station and the, you know, whatever else. I mean, schools still come in as being valuable because people need to send their kids there. But yeah, it's been interesting to see how those dynamics have changed in Melbourne. Have you noticed similar?
Yeah, I mean, I think some of those trends were happening anyway. So if you take, you know, our local area around here, I mean, lots of people sort of since the financial crisis, when there was a real crash in land prices around places like Noosa and Sunshine Coast. I mean, it's become much more popular for people to move up from Sydney and Melbourne to places like this, because it's, you know, it was a bit cheaper, better climate, slower pace of life. But what the pandemic did, it really accelerated some of those trends, you know, because people were forced into having a home office. You know, and a lot of people are like, well, if I don't need to be in the office, do I need to be in Sydney and Melbourne? Lockdowns kind of accentuated things and made people move out to areas where you've got more space, probably slightly less onerous rules in terms of how many people you could picnic with and things like that. Sort of, you know, Melbourne really went to town on some of the restrictions. So, I think the pandemic sort of accelerated some of the trends that were already in place. I think the biggest impact has arguably been on the rental market. I think, you know, people want an extra bedroom for a home office, or they want a bit more space than they did. And that in itself has really caused some of the shortages in housing, because, you know, on average, at least, people want more space than they did before.
Yeah, very true. I know someone who's made a very successful business out of building home offices in the backyard. He's worked out how a way to get around the building code of building kind of like something small at the size of a shed, but making it available for a very low cost, you know, so all air conditioned and attached to the internet and everything. So there's been some innovative ideas that have kind of come from that work from home sort of acceleration that you were talking about. Yeah, interesting times. Thank you so much for joining at such short notice when I ask you to. I'm so appreciative of that, because I knew you'd be a little bit jet lagged, but
that's okay. I didn't have any notes to hand, but it's all up here. So
it's all up there. You write your blog every day. That's a must tell people. You've got to sign up to Pete's blog, your daily blog, because it's like the news in Britain. It's everything that you need to know, a really good snapshot take of it. And I read it every single day. It's very helpful for what I do. So very appreciative of that as well. Yeah, I don't know how you do it, because it seems that no matter where you are in the world, the alert comes through that you've written on your daily blog.
Yeah, I think it's one of those things that if you didn't enjoy doing it, then you just wouldn't. I think you just wouldn't keep it up. But I've always kind of enjoyed sort of dissecting the daily news and the daily sort of data updates from the ABS and just working out the story and putting it into a daily blog post. And I've been doing it for a number of years now, just a daily summary. So Pete Wargent Blogspot, pretty easy to find.
Very many years. You were doing it when we first met, I think. So, which was many years.
Yeah, showing our age now, but I think it's I've had a few million hits over the years, and it's I've always enjoyed it. Just keeps me abreast of what's happening, and I think my old business partner Paddy Allen. Yeah, I remember him saying, "I'm gonna start a blog," and after about 3 years, he'd written one blog post. He's like, "I just can't stand writing," But I think it's just one of those things. If you like doing it, then you keep going. But if it's not your thing, then obviously you do other things like either networking in person or some people like podcasts and visual things. They're just horses for courses, I suppose.
Yeah, I agree with you. I absolutely love the writing that I do and love the work, and it does keep you on top of the things that are happening on the ground. So it just gives you that extra little bit of having to do that research and analysis of it is very interesting, keeps you on the ball. We should also mention your Twitter account, because you are a Twitter feed. On Twitter. I don't know how you find the time for that either.
I've tried to leave. I've given up even pretending I'm going to stop. So at Pete Wargent, easy to find. And if you send me any troll comments, though, you'll be immediately blocked, along with a long list of other people.
You've had a whole heap of impersonator accounts as well.
Oh god, yeah. It's always good fun, social media. So always some good banter. So yeah, check it out.
Shows you hit the right level of fame when you got that.
Yeah, something like that.
It was good. That was very funny. Anyway, some of those accounts were very funny, but thankfully we've got rid of some of them. But so thank you so much. I so appreciate it. I hope we see you soon, and obviously we'll be in touch, and we'll do another one of these. Sort of periodically, whether you like it or not. You come on whether you like it or not, but we'll do another one periodically just to keep people informed of what's going on in the market, because I don't know anyone better to talk to than you, who's really abreast of everything that's happening out there. So it's good to have that kind of analysis coming through for subscribers. So appreciate it.
It'd be good to check in 2 or 3 months, because I think I'm sure you've sensed the same thing. There's a heck of a lot of people just sitting on the sidelines because they're like, well, interest rates are going up, have we reached the bottom of the market? But these things can turn around very quickly when they do, as we saw in 2019 after the election results, and then a cut in interest rates, and the Banking Royal Commission finished, and then suddenly everything was back on. So it'd be interesting to see after the next inflation print whether we're there yet in terms of mortgage rates, because then things might actually start moving again. At the moment, transaction levels are well down.
Yeah, very true. I think about that all the time, going through 2018, saying to people, it's a good time to buy. It's a really good market to buy in. And then it got to 2019, and just as soon as the market turned, I had this flood of inquiry from actually mostly first home buyers at the time.
Turned on a dime. Yeah.
And then it was too late. It was just, it'd run away, because the thing is, when you think about a property, if it's just a negotiation between you and the vendor, then that's a great negotiation to have, right? You can extend that negotiation out, and you can do something really good. As soon as you've even got one other person involved on the buying side, you've lost, you can lose that competitive advantage by quite a significant degree. So markets like this, I still think it, and I still say it to buyers that I'm dealing with now, there's still good opportunities in this market, because people are not stretching, people are naturally very cautious. And if you know what you're looking for and you can identify good investments, then it's still a good market to step in to get something for a long-term investment in property. So we'll see how things go. Okay.
All right, well, thanks very much for having me on. It's always a pleasure to chat, and look forward to doing a catch up in a month or two.
We certainly will. Thanks, Pete. Good talking.
Cheers, catchers.